just looking ahead to the key events and themes this week. Let's start off with the pound, very much focused on sterling. We do have the Bank of England rate decision where they are expected to increase rates by 25 basis points. A hike is 90% priced into the markets now. In terms of my view, I don't think the economy is in any good shape to really withstand a rate hike at this moment. It's very vulnerable in terms of Britain with Brexit going on. Wages are still low. Growth isn't great. It's lackluster. The only real thing to drive the Bank of England at the moment is incredibly high inflation, so they might want to just get hold of that to try and bring those levels back towards their sort of mandated price target. Anyway, in terms of realism for this decision, it is likely to be a hike, but a dovish hike. So what that means is not part of a rate hike cycle, just being a one-off. And I think personally, they're just closing their eyes and pushing the button and hoping for the best. In terms of on the other side of things, they could come out, I wouldn't be surprised and put it past them doing this, coming out and being very optimistic about the economy and noting that this could be part of a tightening cycle for the central bank. If that being the case, expect some large upside for the pound, guys. Just quickly, historically, if we look at the Federal Reserve, when they first hiked rates after them being unchanged for 10 years, we did see in a month's period, sterling dollar, a cable as we know it, dropping around 900 pips in just a month. And look at Bank of Canada most recently when they hiked rates on back-to-back occasions, and that was the first time that they moved in 7 years that they increased their rates. And we saw dollar CAD drop, so Canadian dollar strengthening, but 800 pips, so really big moves. And if that's replicated by the Bank of England and it's part of a rate hiking cycle, as I say, big upside for the pound. Otherwise, if it's just a hike and just a singular one, then expect some downside for the pound. Looking over in the United States of America, we do have the FOMC rate decision, not expecting any change whatsoever at this meeting. They're likely to reiterate that they're closely watching inflation at the moment. We did see a subdued reading this month, but I think they will heavily indicate that they are in course for one more hike. Well, another hike before the end of the year, which will be their next meeting in December. And if that being the case, still expect the dollar to remain very well supported. As we have seen over the last couple of weeks, it is holding firm. But one thing that's going to drive dollar next week potentially is whoever US President Donald Trump picks as the replacement for Fed Chair Yellen. It is very likely she's going to be replaced. Now, the front runner at the moment suggests it could be Powell, who is seen as more dovish and likely to replicate similar views of Janet Yellen over Mr. Taylor, who is seen as more hawkish. And we did actually see the dollar coming off on talk that Powell could be ahead or very much a front runner on that front. And elsewhere, we do have non-farm payrolls on Friday, expecting a bullish 311,000 jobs being added. Looking over in the euro there, we did see a lot of pressure last week after the ECB. They did cut their bond purchases, but they extended it by 9 months, so dovish move there. There's a political mess in Spain at the moment with the Catalonian government voting for independence. However, over this weekend, we have seen a lot of rallies against independence, so anti-independence rallies at the moment. So just keep an eye on the developments of that throughout the week, because that is likely to influence the euro this week, so keep an eye on that. Very lastly, looking over in Asia for Japan, we do have the Bank of Japan rate decision. Not expecting any changes in policy this month, but what I would say is there's some sources hitting major news wires last week suggesting that the central bank could cut their near-term inflation outlook. Now, what that means, if they are seeing inflation lower, then it means more stimulus is still required for a prolonged period of time. If that being the case, expect some yen weakness across the board. Other than that, that's it from me. I hope you have a smashing trading week, and thank you again for tuning in.